Okay, energy, pay attention to oil. Here's earnings. We're doing a little, these are earnings on oil companies, that circle, that red circle. Notice that compared to all other sectors of the market. You know, oil is being devastated. These incredibly negative earnings means companies have to go out of business, stop producing. You know, there has to be a big drop in supply. This cannot go on forever. Okay, next. So here's oil fell apart starting late 2014. Notice it's in a very strong bear pattern. You know, that red line's above the blue line, above the yellow line. That's been the case since 2014. Notice the RSI, though, that first technical indicator with those little bars. It went below 20. It should never, ever do that. That's like an anti-bubble pattern or contra-bubble in this case. And notice then the RSI hit just under, it hit 20, well, but the price was lower, that makes sense. Then it like went up and it's like finally hit 20 or a little above it, and then the price is lower. So it's like resolving that super oversold condition, and like it's done that. Maybe it's going to have to do another price low with the RSI even higher. But this is setting up for a possible rally. We'll see in the daily chart. This is weekly is a longer term chart. And this doesn't look great in the longer term. The short term, though, might look okay for like a powerful rally. Okay, next. Now, this is the daily chart. Notice there is that the price, there is a little base there, you know, flat. It's trying to bump up against that 50-day moving average, that golden line. And, you know, if it can break through that, can get to that blue line, which is just under 50. That's a 200-day. And might pop a little above that, and right now it would hit 50, although that blue line keeps dropping. Keep that in mind. Now notice that RSI, we also have this resolution pattern. It was below 20 in last August. Now it hit 20. Now you see that flat base. In the beginning the RSI is at 20. At the end it's like about 36 or 37. This is a positive divergence, and it's a very strong positive divergence, saying even though the price is going sideways, the big money is secretly buying this. And the reason that big money knows more than you do. They know more than I do. They know more than even they know. That's how smart they are. So they're hearing things, they have extra information, you know, and if you follow the news, you see like this constant attempts to make a deal to cut production. And eventually something will take place. And when that does, and everyone is short the oil market right now. So you get a big news headline, some headline comes across the wires saying, Saudis make deal to cut production. Everyone runs to that door to try and sell their, the machine is outside to sell the oil. They all get stuck at that door and trample each other. And then you get zoop. Now, just like in 1998, that doesn't mean you stay up. I mean, people say, what? They're only cutting 50 barrels? That's not so much. And then they sell it back down, and then we could get a lower low in the summer. August would be like a likely point, which it happened in 2008. So summer tends to be weak for oil. So, we'll see. So keep your eye on this. Notice also the MACD, which is the second day, that's also rising. The black line, the red line is above the blue line, and the DMI in the bottom. The black line is a trend line. There's a downtrend line that's weakening. That's why the black line is going down. It means the selling pressure is going down and down and down. The blue line, of course, is that red line. The selling pressure is gone. It turns into buying pressure. So that could happen very quickly also. So this is set up for like a sudden sharp rally just out of the blue. And it will be news dependent. Someone will make a deal somehow. Or like Iran blows up some Saudi oil fields or some such thing happens. Somehow oil supply gets cut off in some way, shape, or form. And most likely is the Saudis or Russians say they're going to produce less oil. Okay, next. Okay, natural gas is in a mega bear market. In fact, all energy is incredibly, incredibly cheap. We never even look at coal anymore. Coal is like free, or they pay you if you take some coal. So natural gas is notice is dropped and dropped and dropped. When we were doing this several years ago, the cost of production was around $4, and now the price is around 2. And actually, several years ago, the spot price fell to around 199 briefly for one day. And now this is like the regular price. It's not brief. So, and the supply of natural gas, because of fracking, increased. So there's a gross oversupply. And this DMI at the bottom is mega bearish, incredibly strong selling. But once again, natural gas is probably selling for less than its production costs, and that can't go on forever because companies lose money. In fact, Chesapeake Energy, which is one of the big natural gas producers, there were rumors it was going to go bankrupt about 2 weeks ago, and the stock crashed. I mean, just like fell apart, just fell through the floor. And then the president came out, just like Deutsche Bank. Oh no, we're rock solid. They say no, this gas is nothing but hot air, you know. And so yeah, that was meant to be funny. Yes. Okay, I hope you'll laugh.
The rumor that Chesapeake is going to be bought out by somebody.
Yeah, they're selling
A convenient rumor.
Very convenient. I think Radio Shack is going to buy them.
Probably, yes. Maybe Enron. I think Enron will buy them. That's my guess, yes. Yeah, Enron went out of business at the beginning, in case you don't know. You know, and it was a completely fraudulent company. And they did buy a lot of things. They actually did.
Berkshire has bought a lot of Kinder Morgan. I can't do it.
Well, that's a separate topic. So I don't think anyone's buying this. But, you know, they couldn't actually be bankrupt. They could go bankrupt. Companies never admit they're going bankrupt. They will be, and no bank says, yeah, we're insolvent. Yeah, so what? Big deal. You know, they always lie. In fact, like Bear Stearns, we've said this many times, the week it went under Friday night. You know, early in the week, it was rushing to get out its next quarter's earnings because they were so good. And it was showing that the company was making lots of money. Then Friday, it went out of business. So, like, you know, you can't believe a company in trouble. You can't believe anything they say. They're all going to lie and say, no, we're not in trouble. So, and because what if a bank said, yeah, we're insolvent, no one would do business with them the next day. They would be insolvent. They can't say anything bad. So, like no one in 2008 said, yeah, we're going under, sure. So what? Yeah, we said they were going under, and we predicted almost every company that went under in order. Not like, hey, a bunch of companies going under. We actually said Lehman would not go under after Bear Stearns went under till later on, and it didn't go under to September, and that was March. And we said Bear Stearns was going to go under the August before. We were the first people probably in the entire world to mention this. And that week, in case you don't watch CNBC News, Jim Cramer was, don't sell Bear Stearns. Don't, a famous video. He denied saying he lied about it. I mean, he's on video, so we can still see it, unfortunately for him. But he said, don't sell Bear Stearns stocks. Lose all your money. You know, this is like how much and he's supposed to be an insider. So either he's not an insider or he like lies through his teeth, or both. Okay, next. So natural gas, at some point it's going to bottom, but it's not going to get that bump like oil because there's no mechanism to do this. Oil production cut is the mechanism. There's no news about natural gas that would like make it suddenly shoot up. It could gradually start going up, and it will at some point. Now the dollar should have broken through 100. It tried to do this in January. It failed. It failed that in November. So it looked like, okay, gets another chance. It failed to do it this time. It's actually fallen to that 65-week moving average. And if it falls below it, which it hasn't done yet, then it's likely going to turn bearish because that yellow line is going to cross the blue line, then it's going to cross the red line. This will take 2 months, 3 months. It's not going to happen tomorrow. But notice the RSI fell below 50, which is bearish. The MACD, the second one, is trying to fall below 0, which would be bearish. The DMI is actually on the sell. Technically, it's on a sell signal almost. The red line's above the blue line. The black line's trying to cross it. If that black line, which is going sideways, is not a significant sell signal. That black line starts rising, it's a significant sell signal. And the dollar is going to go down.